Thank you everyone for joining in. I'm Carol Lighthall. You probably guessed that, with Okemo Valley Chamber. Sorry you have a stagnant picture of me sitting there, but there was something going on with my screen, my background. So today's program is an SBA program review, and that's being done by Chris Herriman. I want to acknowledge Patrick Cody and Okemo Valley Television for helping with today's show. The way the program will be set up is that Chris will review the programs associated with the stimulus, the SBA programs, and after each program, we'll pause and take question and answer. And we'll try to, we're recording this, so this will go on our website, and we'll share it, generally speaking, wherever we can. So let's get started. So Chris Herriman is with the Sba office here in Vermont, in Montpelier, I believe, but she can elaborate. Her position is Economic Development Specialist. You know, I've checked around and talked to quite a few people, and some people were hesitant to want to do a presentation just because the nature of the stimulus programs in general are they're evolving and adjusting. And Chris thought that was a great reason, I think, to come on and answer, give the best answer she has for the different programs. Let's turn things over to Chris, and I guess I would start, Chris, if you want to share anything about yourself, a little bit about your background, and then launch into programs, if you would, please.
Sure. Thank you, Carol. So again, I am Chris Herriman, and I have an office actually at the Montpelier District Office for the U.S. Small Business Administration, but I'm typically only there one day a week because I am on the road doing programs like this, working with individual businesses, and doing a lot of training on how to start, grow, expand, close, multiply a small business. So I'm out in the community a lot. I'm also the Veteran Business Development Officer for the state, for the U.S. Small Business Administration. So the majority of my clients are veterans and their family members. But for this, what we're doing is, first of all, our entire district office is teleworking right now. I usually do telework at least one day a week. So for me, it was not a grand transition, but for some of my colleagues, it has been a real challenge. But I'm happy to be here. I'm happy to answer questions. And what I'm going to do is I'm going to start with the one that is the most popular program through the CARES Act. And well, first of all, let me give you a little background. Sorry about that. I am a former banker, commercial lender, bank branch manager, and I was actually in the Rutland office of Chittenden when it was Chittenden Bank. And I have done small business counseling through the Small Business Development Center. I've been a government contracting advisor, and I've been with SBA for about 7 years now. I am also a small business owner. My family owns a campground in Vermont, so I have been on all of the sides of being a small business owner, getting small business loans, approving small business loans, counseling about small business programs. So I really have all sides of the table. So feel free to ask me questions on any of those topics. So let's start with, the CARES Act had several pieces to it directly related to small businesses. I'll start with the one that is in the news the most, actually, and the one that has the most controversy right now, actually, and that is the Economic Injury Disaster Loan. And that is the name of the program. We call it EIDL, E-I-D-L, and that's the one that you can go online. It's direct with the SBA. You go online and you complete an application form. It's a very simple process. It took me 14 minutes, and that was probably 3 minutes longer than it will take you because I put a couple of incorrect pieces of information in there and had to go back and change it. But on that form, you are only going to be asked a few questions about your business. And obviously, all of these programs are applied for in the name of your business. So even if you are a sole proprietor, your business name may be your own name, but you have to put your I'm talking in the name of my business hat on. So you answer the questions about your business. You put in the tax ID number, social security number if it applies. You put your annual revenue. You put your prior 12 months of revenue, prior 12 months of cost of goods sold, number of employees. Hint, if you're a sole proprietor, you have one, because as the owner, you are the only employee of that company probably. And then you put some other basic information about the company, and then you fill out a section that is you as the agent/owner. So you will put your name again in there. You will put your social security number in there again, and some other information that will make you personally identifiable. And the reason that is important, because I have had calls about this, people are nervous about putting their social security number, date of birth, place of birth. The reason that's important is because there are bad actors out there that are robo-applying for these loans. So we need to verify that you are in fact a real person applying for the loan. Anyway, so you go through the process and you come to a section that says, I would like to be considered for up to $10,000 loan advance. If you would like to be considered for that, that is the one that could be forgiven. You check the box, you put in the routing number and checking account number for your business checking account, click submit, and then you will get automatically, it's not an email later, it comes right up, you'll get a page that gives you an application number. That's your confirmation that you've completed it. So this program is specifically designed to get money out to the public as quickly as possible. The controversial part right now is that it really has been delayed. I just now, yesterday and today, I received 2 emails from people I've worked with that have in fact received money in their bank account. This money is a loan. The umbrella program is a loan. The loan can go up to $2 million based on your business information. The loan advance piece of it is what people are hearing about, and the up to $10,000. So it is definitely up to $10,000 because it is based on $1,000 per employee. If you put 1 employee, then your eligibility for the loan advance piece of it would be $1,000. So technically, people said, well, not technically, but people have been saying, wait a minute, I was told I was going to get $10,000 as a small business owner, and it's really unfortunate that that was a miscommunication and a misunderstanding. If you look back at all of the communication, it says up to $10,000, but it's not super clear. So I can tell you now that that's what it is based on. And then what will happen is after that, then you will receive a notification from the SBA about the remainder of the loan. So let's say you were approved for a $15,000 loan based on the information you provided. You'll get this email from SBA, and they may say, hey, we just need to verify, we need a copy of your tax return, or hey, we're approving you just based on your credit rating, or whatever. Let's say after all that happens, they say, okay, $15,000 is what you're eligible for. We're going to set up the closing. So would you like to accept that? So you have a choice at that point. You can either say, you know what, I've decided I don't want it. Things are back a little bit more to normal. I can make it. I really only wanted that $1,000 that I already got. I don't want a loan. We're done. You can say, I want 5,000 of it because I think that's what I'll need to carry forward. Or you can say, I want the whole thing. It's your choice at that point to accept the loan, accept a portion of the loan, or take none of it. Or you can put it on hold. You can say, you know what, keep my application on hold, and within 6 months, I'll come back to you if I decide that I want something. You have the choice at that point to make that decision. If you decide to take any portion of the loan, they'll set up the closing, and the portion of that loan that you got in, that's like the $1,000 that you got as a loan advance, is going to be forgiven. Completely waived. You will not owe that back. That was an advance on the loan that is forgiven. So the rest of it would be a $14,000 loan to go out 30 years at 3.75% if you are a for-profit company, and 2.75% if you are an eligible nonprofit company. So those are the basics of the program. I know I'm probably going to get a lot of questions about this one, but the hardest part to communicate with people right now is just the delay. So in the state of Vermont, so far, we at the district office have not received notification that anyone has received the loan portion of it. The only thing I've heard about are those 2 advances that people that I was working with had received directly into their bank account. So those are the 2 things I know for sure. But my understanding is, and I just had a call this morning, is that things are ramping up, and we're hoping, I'm crossing my fingers right now, we're hoping that there's going to be a big dump of approvals that happens very quickly, because an awful lot of people I've spoken to applied at the same time, which was on that March 30th when there was an announcement made saying, hey, go online and fill out the application to get eligible for the grant portion of this program. All right, so I know I'm going to have some questions. I'm going to stop right there and see if I can answer some of those.
So if you have a question, I think you can just unmute yourself and ask your question.
I have a question. Lisa Ham, Green and Wells. I have a couple of vacation rentals that are LLCs, but the people that I pay are not my employees. I did not put them down as employees because they are, you know, one's a management company and one's a cleaning service. Did I do that right, or should I put them down?
Yeah, first of all, those are great questions. Number one, when you go in to fill out the application, I'm sure that you filled out the portion that said loss of rental income. Do you remember seeing that on the application?
Yeah. Mm-hmm.
Okay, so that's a little bit of a different section than people that have just your standard everyday business, because loss of rents is you have to have an existing loss of rent. So like, for instance, you can't say, I've lost a reservation for the next 6 months, because that hasn't happened yet. If you have rental properties, you can only put a dollar amount in there that has already happened. So if you have a loss of rental income, it had to have happened before today. Okay, so that's number one. Number two, your question about the employees, you were absolutely right. They are not your employees. So independent contractors, and which both of those sound like they are really, or they're just people that you hire for services. Either you pay a 1099 or they're just an independent contractor that you bring in and you expense out with your on your financial statements. Those companies or people are allowed to apply on their own. So they are not eligible to be listed as employees under yours.
Okay.
And the reason for that, there's a good way to explain it, is that all independent contractors by definition are not an employee when you look at the Department of Labor. If you're not paying them payroll taxes for them, they're not your employee. And the reason is because they could have you as well as many other clients. So they are their own entity, and they have the ability to apply on their own as an independent contractor. Did that answer it?
Yes, sorry, I had remuted.
That's okay.
Anyone else?
I see one that came up on the chat. Do you want me to answer that one?
Sure.
So it says here, read something somewhere that the payroll program's running out of money. Our bank forwarded our app to SBA, but nothing's happened yet. Is there any way to find out about our status? So great question. That's going to be the next program I talk about. So let me address that at the end of that one. And I promise you I won't forget you. I'll make sure I answer that question for you. Are there any other questions about the EIDL, the EIDL program?
So I have a question, Chris. So what do people do? Because I heard you say that there's an application number that comes up.
Yes.
Is there a way to get that confirmation at this point if it's already been done?
No. If it's already been done and you didn't happen to print up that page or write down the number, unfortunately, it's extremely difficult to get through to the back door of the loan program right now because there are literally hundreds of thousands of these being processed, actually millions. Someone said this morning on our call. So no, and the thing is that the application number is not really an important thing for you to know at this moment. The important thing to know is that there is one. If you don't remember seeing that page pop up, that might mean that you applied prior to March 30th online. If that is the case, then you need to go back in and complete that very short application online, because chances are that was the old form and the newer forms are the ones that they're processing to get access to that loan advance piece that is forgivable. Well, forgiven. It will be forgiven. I've got a cheat sheet that I send out to people that has the link to the correct page. It also has just a list of things that you'll need to have with you when you fill out the application and a couple of helpful hints that, things to not to do, which oftentimes is more important. And I'll be happy to supply that to you, Carol, and then you can just forward it out. I think I did send you one. Did I send you that? Do you remember? Oh, you're muted.
I don't think
Okay.
so.
Okay, so I've got a couple things I can send you, a copy of that cheat sheet that has a live link with the hints on it. And then after I go through the Paycheck Protection Program, I can also send you the actual application form for that. So people can print that up and take a look at it and know what they're going to be asked when they go to their bank. So I'm happy to forward that to you afterward, and then you can just send it on or have it on your website or whatever.
Great, perfect. We'll put it on the website, everyone. There's it looks like 2 questions from Melissa.
Okay, 2 questions. I've heard different things regarding the timeline for reporting income. On the application, I think we're talking about the PPP. On the application, it says just the last 12 months since disaster occurred, but someone else said all of 2019. Also, what does cost of goods sold have to do if I'm only getting $1,000 as an independent contractor? Oh, the EIDL. Okay. So the first one is the timeline for reporting income. So on the application, it does say the prior 12 months. And that's going to be up to you because they will accept either your 2019. If you've done your taxes, that would be the one to use because it's simple. It's already there. You have a real number. If you would rather use the prior 12 months, and it gives you a date on there, I believe it's January 27th for the prior 12 months, you can use that one. It's up to you. Either one of those will be acceptable. So what does cost of goods sold mean? So cost of goods sold is not often used by companies, but it is always used by companies that purchase things that are then resold. A good example of that is like an auto repair shop. So when you go in, to get your car repaired and they buy the parts and then they bill you for the parts. But what goes into their revenue column is the whole amount. So your car repair costs $1,000, you pay them $1,000. That goes into their total sales. Their cost of goods sold would be what they paid for the parts they put in your car. So they would subtract that out because that really was not a sale, that was purchasing the part. Only the difference between that and what they charged you was their revenue. So if you are an independent contractor that doesn't have to buy things, like sometimes landscapers buy the plants and they install the plants and then they charge their client like one fee, that would be cost of goods sold. And I think I need to clarify, it says also, what does cost of goods sold have to do if I'm only getting $1,000 as independent contractor? Those are really two different questions. Your total revenue and your cost of goods sold is the loan application piece of it. You are applying for a loan when you fill this out. So I need to make that really clear. You're applying for a loan. You will be eligible to get a portion of that as an advance, and that advance will be forgiven. But you still have applied for a loan. So then you'll be approached by SBA and told what you're eligible for in the loan amount. At that point, you can say, I don't want the loan anymore. I've decided I don't want the loan at all, or take a piece of it. But that's what I'm talking about for the cost of goods sold. They want to know what your revenue minus your cost of goods sold, so they'll have an idea of what your net sales were. And I have another question. If I guesstimate the amount cost of goods sold, will I get dinged if I make a mistake? No, I can't imagine you would, to be honest. I know that's just me talking, but if it's based on anything to do with fact, I mean, if you have a prior year tax return and you had gross receipts and then cost of goods sold, and it's anywhere near what it looked like, relatively speaking, I can't imagine anyone would have an issue with that, if they even look at it. I mean, some of these loans, depending on the amount, may be approved just based on a credit rating. They may not even ask you for any proof or evidence about what your revenue was. I mean, if they're very small loans, chances are that might be happening. All right, so are we good?
Hang on, sorry, I was trying to type. Can you explain one last time the $1,000 as opposed to the $10,000? That was the miscommunication. The $1,000 is just across the board no matter what, or was there some kind of stipulation?
No, the $10,000 was always up to $10,000 as a loan advance, and that loan advance would be forgiven. That's kind of how the program was set up. So, and the $10,000, there really was initially no baseline. Like, what is that? What are you basing that on? Is it based on, the size of the company, or what your sales were, or what? So it was determined a couple weeks after the program started that would be based on the number of employees that you put into the application. So it is based on $1,000 per employee. So the eligibility of the loan advance, which will be forgiven, is $1,000 per employee. If you have 10 employees, it would be $10,000, and all of that would be waived. If you have one, it will be $1,000, so on and so forth.
And so maybe a question I had heard that the application for the EIDL that's on the website is not the actual application, that you complete that and then you'll have to complete kind of a full application later on?
No,
Chris? No.
that was the initial process. So when it first rolled out back on, gosh, I think it was March 20th, when the announcements were made, there was an application that was online that you actually downloaded and you completed, and then you uploaded it back into the system. And then you would also upload your tax return and a 4506T, which is a request to the IRS to get a copy of your tax return. And there were a personal financial statement. There was all kinds of stuff that you uploaded into the system. Then there was another iteration of it because that one wasn't working properly. So they did another one where you filled out the application and then emailed it. And emailed the information. Then that one stopped. And then at midnight on March 29th, the new system was put into place. And that new system is the one that has the online application. There is nothing printed up and there is nothing uploaded and nothing emailed. Everything you need is right there online, and it is completed online. You submit it online, and any additional information that is required will be requested by email from SBA. So you'll be contacted by SBA, and they'll say, we reviewed your application. We just need fill in the blanks, you know, some additional, maybe your year-to-date financial statements or a personal financial statement. If it's a, you know, if you're eligible for $1 million, they're probably going to want a little bit more information. But as it stands right now, the only application is the one you complete online, and 10 to 15 minutes tops is what it takes to complete it.
I have a question.
Sure.
So as long as you have that 10-digit application submitted number, you just sit back and wait.
Correct.
Okay. And then by doing the PPP and having them fill out with the bank, they decide through your 941s on what you're entitled to get.
So that's a different program, but let's start that. That's a good segue. So that's a different loan. There are two programs. So the EIDL is the first one we just talked about, and the PPP is the Paycheck Protection Program. We call it the Triple P. That's our wrestling name for it, which probably a wrestling name is pretty appropriate right now. So the Triple P program is done directly with your lender, with a financial institution that is approved to do SBA loans. I'm seeing the tops of two heads right there.
Yeah, that's where we're hiding.
There we go. Hi, I'm waving to you, but you can't see me. So we'll jump right into that. So what happens is you apply for the Triple P program with your bank.
We did.
And not all financial institutions are doing them. Some of the very small local institutions are not, but the majority of the ones that we work with here in Vermont are handling the Triple P applications. So what happens is you can get the application right online. I'm going to send it to Carol. She can make sure everybody has access to it. But it's a very simple application, and you complete that application, and you provide information about, depending on which timing you chose, there are a couple of different options. You can use 2019, the payroll for the entire year of 2019, or you have the option of using, let me see,
The first quarter
February 15th, 2019, between that and June 30th of 2019, that's one option. Or January 1st, 2020 to February 29th, 2020. I think that's the one you were thinking of.
Yeah, that's the one we did.
Those are the options that you have. You provide that information on the application, and when you're using that, you determine what is the monthly average payroll. So whatever method you use, you're going to divide it out by months, and you're going to get an average monthly payroll.
Exactly.
You take that number, you multiply it by 2.5. That is your maximum loan amount.
Yes. Now, when you get that loan and you use that loan for payroll, what if a old employee can't come back to work? Are you allowed to use that for a new employee and still?
Yes.
You are.
Yes. They're not going to match names.
They're not going to match names. It'll be who's ever working at the time.
Right. So let me go through the rest of the process for the people that aren't familiar with it. So how that one works is you go to your bank and you say that you want to get access to this Triple P program, because the benefit of this program is it could potentially give you access to 8 weeks of payroll plus some additional expenses that are only in a few categories that could be completely forgiven, or a portion of it. I mean, you can either have it 100% forgiven, or depending on other factors, it could go down a little bit depending on a prorated amount if some of the stuff didn't qualify. But if you have a payroll that is significant, especially, but any payroll, who wouldn't want it waived, right? And now that we know that the EIDL program is only providing that loan advance piece that's forgiven for $1,000 per employee, if you would benefit more or additionally, because you can have both, by doing the Triple P program, then absolutely, I encourage people to do both. Okay.
Great.
So the key here is that you get that number, that 2.5 times the average monthly payroll, and then your financial institution will tell you the documentation that you need to provide to support that. 941, so people that don't know what that is, those are payroll records. If you have a company that provides your payroll for you, it can be pretty easy. With other people that just have a bunch of employees and they do it themselves, sometimes it can be a little more complex. But I can tell you that the financial institutions are saying, just give me what you have.
Shoebox
Give
and
me everything you have. Yeah, right. That box with all those little receipts in it. So anyway, so they're gonna ask you to provide that information, and that would be the maximum loan amount. So the 8 weeks of payroll, if you think about it, why are they multiplying it by 2.5? Well, there's a couple of reasons. Number one, you're using prior payroll. So there's a potential that your actual payroll now will be higher than it was previously. So the 2.5 can be used, anything over the 2 months, so 8 weeks, can be used for increased payroll costs. Let's say you brought on additional employees. I mean, I've talked to a couple of businesses that are going crazy. A food truck, they can't get enough people to work at their food truck because they have so much business, people pulling up to their driveway where they've parked their truck and taking food to go. So there are some companies that are going to be, number one, adding on people, or number two, this is more prevalent, is providing bonuses to their employees to come back in a high-risk situation. So some are providing hazard pay. It's not required by any means, but some people feel like it's appropriate. Some people are providing additional pay for this temporary period to replace tips, because there will not be individual tips provided to people. So there are reasons why 8 weeks prior payroll would not necessarily match up with 8 weeks payroll starting today. So there's that. On top of that, you are also eligible to use a portion of the money to pay for a couple of very specific other expenses. And those other expenses are only these: mortgage interest, not your full mortgage payment, no principal, just mortgage interest; rent. So oftentimes individuals own their building and then they rent it back to their company, not uncommon. That would be rent. So the company pays that, it's on your tax return, that is eligible. And utilities. So utilities are anything that falls into that category, and the phone is not a utility, just in case you want to ask that question. I get that question a lot. So those are the categories of things that can be paid for in addition to the payroll. The key here is that the payroll has to be at least 75% of the total loan. So if the total loan was $10,000, the payroll has to be at least $7,500 of that in order for the rest of those expenses to be included in the forgivable amount.
Gotcha.
So what will happen? what will happen is you will go back. So they'll give you the money, you pay your payroll, you use it to pay some utilities. In the meantime, your EIDL goes through, right? The EIDL. And they give you, let's say $2,000 up front that's forgiven, and they give you another $8,000 on top of that for a loan. The key here is that you cannot use the two forgivable amounts for the same purpose at the same time. So if you got your PPP loan today and you started doing payroll today for your employees, and you got notice that today your EIDL went through and they gave you $2,000. You can't use the EIDL money to pay payroll and the PPP money to pay payroll to the same people at the same time. The
One would
EIDL
have to
money
go to
can,
rent.
well, actually, well, you want your rent to be available in the PPP as well, because that will potentially be forgivable. But the EIDL loan is used for ongoing business operating expenses.
Ongoing.
Gotcha.
Okay, gotcha.
Okay.
Supply chain.
Principal.
Yeah.
Yeah, supply chain,
Right.
principal on loans. You know, if you have an equipment loan, if you have insurance payments, if you have a tax payment that's due today, what we don't want people to do is, number one, benefit from it. So you're not going to go buy a piece of equipment with any of this money. You're not going to remodel the lobby. You're not going to do anything that would personally benefit you and your company, because every dollar that you use in these disaster funds is money that someone else can't use. So we want you to be responsible about it, right? And so the EIDL money, hey, pay for the phone. Hey, that's an ongoing business operating expense.
Your
It's not a
insurance.
utility, but it is an ongoing business operating expense. So
Yeah.
you can use it for that. And if you don't have money coming in to make those payments, that's what you use that EIDL money for, okay? So once the EIDL money, once the EIDL money is, if you have a loan, and let's say it's 6 months from now, the PPP is already gone, you already got your forgiveness on that, you provided all the documentation, because you go back in after the 8 weeks, you go back to the bank, and you provide them with evidence that you did what you said you would do.
Okay.
You used it for payroll. Here's the receipt showing I paid my utilities, whatever. They take that evidence and say, okay, looks good. And then they submit the forgiveness request, which is basically just done. So let's say that happens. Everything's great. You got that all forgiven. So now you still have $8,000 left in that EIDL, the loan piece of it, that you said, you know what, I'm going to go ahead and take that. I'm just going to put it in a bank account. And if I need it, I'll know it's there. So you got the $2,000, and that was gifted to you. They forgave that piece of it. That was the advance. They also said you have another $8,000 that's in the loan part of it. So you have that $8,000 loan. It's 3.75% for 30 years. You put it in a separate bank account. And if you need it to pay ongoing operating expenses that have been depleted, that are difficult to pay as a direct result of this disaster, use it. At the end of 6 months or so, this is up to you. Obviously, this is your choice. But I'm just recommending at the end of 6 months, go back and say, okay, I had an $8,000 loan. I put it in a bank account. I only had to use $2,000 of it. So there's $6,000 sitting there that has not been used in this disaster loan. Pay it down. Instead of keeping it for another 30 years and keeping that money out of the pockets of other people that need it, pay down the disaster loan if you did not need to use the money. Please don't keep it and use it for other stuff that's happening later, because that is not a direct result of the disaster. Be responsible with how you, and maybe keep it for a year. That's up to you. But my suggestion is pay down what's left. Then you'll only have that small piece, or whatever that piece is. That will be 3.75 for 30 years. And you will be confident that that loan was used only for disaster purposes.
So
And then it will put the money back in a pot so that other people can use it, like the tornado that just happened.
Yes, exactly.
Yeah. All right,
Can I
so there
ask
was
a quick
another
question?
question out there.
yeah, so on this is Brent from Clear Lake. At the PPP loan and the other one, it seems like, how are you going to prove, or how are you going to show the bank? People are recommending to me to just open up another checking account and keep the money completely separate, so it can be easily shown that I used it the correct way. That seems a little bit dramatic or whatever. What are your thoughts?
Brett, I don't think that you have to do that. I think that if it's pretty clear what you used it for, and I mean you don't have to prove that it specifically went out of this account and then show that it's a canceled check on the other end. This is going to be the bank's decision on how they document for the forgiveness piece of it. But in my mind, as a former banker, if you have a business checking account and you can show either through your online bill payment or through a canceled check that you paid your utility payment or that
Well,
you
right.
paid your
Yeah.
payroll,
Well, I
then
know,
you should be
but
fine.
right. I mean, but it just seems, from like, so what you're doing is you're putting a big hunk of money in a bigger pot, and you're paying stuff, and you're just going to show at the end that you actually paid your employees the same as you
Right.
did the last 12 months. So
Yeah. Yeah.
I guess I see it, but they keep saying we need meticulous, very accurate bookkeeping on all of this. And it's like, well, I don't know
Yeah.
what more you need other than a thing that shows that everybody got paid, like QuickBooks.
So I agree with you.
Okay.
I really agree with you. But here's an alternative for you, or an alternate solution. You could open a separate bank account. I mean, obviously, that it seems like it's kind of a pain, but it is a good way to sort of separate it in your brain. And I don't think that you would necessarily have to pay things out of that. But what you could do is open a separate bank account and do a transfer for the exact amount that you need when you make the other payments. So when you make your payroll, the payroll's $4,050, still pay it out of your regular account, but then make a transfer between
That's
that
a good
new
idea.
account into your account for $4,050.
Yeah.
And to me, that is a good supporting document that says that's all it was used for.
Yeah, that's a good idea. So
I have a
another
question again.
Oh, go ahead.
No, I applied for a personal loan back in like October, and they're still kind of working on it and stuff like that. And will that have any interference with any of these other disaster type loans?
The only way it would have anything to do with it is a hit on your credit report. So if they hit your credit report back in October, it will have impacted your credit rating. And that's really the only thing I can think of, unless they pull up another one for that personal loan.
But I
That's
mean,
the only way I can.
by having a personal loan out there, that has really nothing to do with its personal.
No, it does not, because you are applying for a business loan.
Yeah.
You are not applying for a personal loan.
Yeah.
Okay. There was
Thank
another
you.
question? You're welcome.
I had another question about the PPP loan. One thing that's been good is I've learned that we could be a little leaner on staff and still get the same amount of stuff done. So, I have some thoughts that, unless things really got really good, which I don't see they're going to get better than they were, but assuming that, I'm basically going to be paying. I have people that I don't think I'm going to need to bring back, but I've got to pay them for the 8 weeks anyway. They've all gone on, people have gone on unemployment, to which they've gotten no money from that yet because it's so screwed up. But anyway, how do basically you're saying I got to pay those people, even though I'm not going to bring them back, just pay them anyway.
Well, the goal of the program is to bring the staffing up to the level where it was before.
Right.
And so the bank is going to be comparing the two, and it's going to be based on head count and dollars. So theirs is going to be FTE potentially. You really have to ask your lender how they're going to be documenting it. So like if you had 2 part-time employees and instead you just boosted one of them up to a full-time and the other one you just didn't bring back, I mean, that's a business decision. But I think that's a conversation that when you have the closing on your triple P loan, you bring it up. You say, here's the situation. I had 10 employees. I'm looking at bringing 8 back. How is that going to impact the forgiveness portion of my loan? And if they say, well, it's going to be prorated, so that means if it's 20% less, then the forgiveness might be 20% less. I don't know how they're going to do it, but you have to ask the question.
But can you give me any examples, like say, just for an easy number, because it's, let's say $75,000, right? So $50,000 of it is my payroll, and 25 was, no, is that how it works? That's 25.
Yeah, 50,000 would be your payroll, and then 25 you want to use for other expenses. So if you have 75,000,
Yeah, but that's a quarter. You're talking fifths, so you got to go.
Yeah, so 50, 60, or 50 is what you're.
Go to $100,000. So 20,000 is the 25% extra. 80,000 is the payroll, this is actually pretty accurate. So, so let's say that situation, obviously I can pay for, rent or oil or whatever else I can and spend the 20,000, the 25%. But if you're saying that I've got to spend 80,000 on payroll in order to get the full 100,000 turned into a grant, and if I don't, and say I'm down, I only do $60,000 in payroll, and I miss it by a certain amount, does that mean even the money that I spent on rent is no longer going to be grant? Or I'm trying to decide how worth it is to me to pay for people that I know I'm not going to bring back.
That's a good question for your lender. I can't give you that exact answer. I'm sorry. I really can't, because the SOP hasn't been written. The standard operating procedure has not been written yet, but the lenders have full authority to do these loans and provide you with what is necessary in the end. So they're going to let you know how the prorating is going to work. So if the $100,000, if you only bring back 50% of your employees, is that going to knock the whole 100 down to 50, or is it only going to knock the 80 down to 50%? That piece of it has not been made clear yet. So I don't want to give you an answer that's incorrect. What I would say is that's a conversation to have with your lender. And I recommend when you do the closing on that loan, which is when it's going to start, that 8-week timing, you have a very in-depth conversation with the lender about what their requirements are going to be when you bring back documentation. The question needs to be, what does this have to look like when I come back in order to be eligible for 100,000? I mean, 100%.
So I did this thing a couple of weeks ago, so I'm hoping it's going to come in soon. But I have to know soon, because I have to start paying people maybe next week, because if that's going to be the criteria. So I can't wait until the end of the 8 weeks and say, oh, by the way, how is this going to be figured? I need to know that now. So if it's,
you need to know it at closing.
When
at the loan closing.
But is the loan
that's
closing?
The day you get the money. That's the day you get the money.
Right, because my banker sort of described it to me a little bit like this. She said, you're going to get the money, and then at the end, they're going to decide how much they're going to call a grant and how much they're going to pay you. I mean, whatever.
That's correct. So when they give you the money, they're going to say, here's your baseline.
Right.
We have determined that this is what you're eligible for.
Yeah.
So when they hand you the money, you're going to say, I want you to tell me exactly what it needs to look like when I come back to ask for forgiveness, and I will make it look like that.
Okay.
That's
so then,
the best
I hate to take over.
And I have 5 more minutes. I have 5 more minutes.
Last one. Can you do them both? Can you do the PPP and the
yes.
idle? And should you? I haven't done the idle yet. Okay. All right.
Yes.
I'll give somebody else.
Just don't spend the same money on the same thing. Don't double dip. That's my only requirement. And believe me, I know that everyone out there that's listening to this has some sort of ongoing operating expenses that they can use that idle. If you get you have other stuff you can spend it on. Don't spend it on payroll, utilities, or rent and mortgage interest. That way you'll never cross over. Okay, anybody else have questions? Oh, wait, there is one up here. Under detailed business activity, if you choose business services, then you get a submenu of services, and one of the choices is blah, blah, blah. As a marketing consultant, I was going to choose that, but saw another video saying not to choose that because you'll get automatically disqualified. Yeah, you can't. You cannot be a multi-level marketing company and be eligible for these loans. So that part is correct. But if you are a marketing consultant, you are not a multi-level company. Multi-level marketing company is like Avon, or where other people are paying up to you every time they make a sale. You make a piece of their sale. That's multi-level marketing. I think you're confusing that with the term marketing, which is actually, advertising marketing. Two different things. I hope I answered that question. Can I use my 1099 for the PPP? Can I use my last 1099? You know what? I'm going to have you contact me directly on that one. So chris.herriman@sba.gov. That's CHRIS.HERRIMAN@sba.gov. Go ahead and email me directly. We'll set up a time. I'm setting 30-minute appointments. To answer the question about the independent contractor, the next one for local newspaper, does ongoing business expenses include weekly printing costs to print the newspaper? Absolutely. With an LLC, can the owner payroll count? Yes. Okay, I got those. One last thing I wanted to tell you about before we go. There is a third piece to the CARES Act, and that is the SBA Debt Relief, and that is for people that have existing SBA guaranteed loans, and these are done through a lender. So a 7A loan, a 504 loan, a micro loan through approved micro lenders. If you have an existing SBA guaranteed loan, there is going to be 6 months of principal, interest, and fees paid for you by the SBA. So you will not have a payment on those loans for 6 months. And if you have already got a disaster loan, then also 6 months of debt relief, automatic deferments through December 31st of 2020. So that's another piece of it, that if anybody out there has existing loans. All right, we're getting to the very end, and I'm going to be on a call in 5 minutes with the administrator of our agency, and I'm hoping beyond hope that we're going to get some more information about money that's being distributed, because I want to know that Vermont companies are getting some of this money. So any other quick questions, or should we just sign off now, Carol?
I think you need to sign off, and maybe a parting message is that you're still available, correct? You were talking about the 30-minute appointments.
Yeah, absolutely. If you email me, I'm setting up 30-minute appointments, and I set them, let's see, I'll set them through Thursday afternoon, and then I'll start again next Monday. And I'm happy to do it. I really am. So email me. We'll set up a specific time that we can have a phone call and clear up any confusion that might be going on, which I know there's a lot of still. So I hope I was able to answer some of your questions anyway. Parting information: apply for both if you are eligible. If you are a Schedule C sole proprietor and your net profit on your Schedule C is 0 or negative, unfortunately you will not be eligible for the PPP loan, so just do the EIDL. But if you do have anything above 0, do the PPP and do the EIDL. I hope everything works out for all of you, and call me if you need it.
I just wanted to say thank you. You were very, very helpful.
Yeah, thank you.
You're welcome.
Thank you, Chris.
Can you repeat your email address?
Yes, Chris, CHRIS .Herriman, HERRIMAN @ sba.gov.
Thank you.
You're welcome. Good luck, everybody. I'm going to sign off.
Thank you, thank you. So that's all we have for this time, and we'll maybe get her back again for another update. If there's another program you want to hear about, please be in touch, and thank you for participating.
Thanks,
Take care,
Carol.
everybody.